Hello everyone. I'll be looking at task A from APC 2021 assessment. And in this particular recording, I'll just be going through what the expectations were for task A so that you can assess against your own response and use this as a learning tool to understand your performance and better prepare going forward. Then if we look at task A, high level, just to recap what the task was about, this is where you got 3 questions from Ryan in a draft memo that he was compiling for the school's council. In that memo, there were 3 questions that he wanted clarity on or that he asked you to respond to. Those 3 questions basically have to do with, number 1, does the school's financial position put the Midrand school at a risk of an RI being raised by its auditors? Number 2, the question related to whether or not the Midrand school is a going concern and what type of evidence would need to be given to the auditors to persuade them to agree on the going concern status. And then the last question, what was in relation to the minimum matters that would need to be disclosed in relation to the going concern status of the Midrand school in the 2021 financial statements. So in terms of expectations, the expectation would be that a candidate responds appropriately to the key aspects of all these 3 questions that were there. So the key aspect of question 1 is in relation to the discussion that a candidate puts through to support whether or not there is an unlawful act in relation to a reportable irregularity. So that unlawful act discussion really becomes very, very crucial in order for one to demonstrate good understanding of that particular expectation that was there. Then on question 2, that is where one had to assess the going concern status of the entity and the evidence that would be needed to persuade the auditors. So with that particular question, key aspects of that question is, whether or not the candidate understands the use of a subordination agreement, and also does the candidate at least provide one additional, example of the type of evidence that the auditors would look for. So we're looking for both those aspects. Do you have an understanding of a subordination agreement? Because that was, key evidence that was presented to you in the scenario, and also what additional evidence can you put through over and above a subordination agreement for the purpose of supporting a going concern assessment. Then under question 3, a key aspect that we're looking for there is the type of disclosures that you recommend for the financial statements. Obviously that has to be appropriate, that has to be relevant for going concern disclosure, because that's what the question is asking ultimately. Okay. So now, with those expectations in mind, let's then look at the discussions and whether or not they would meet expectation. The discussion under question 1 for this particular candidate, this is where the candidate refers to section 45 of the APA, which deals with a reportable irregularity. It says there, where a client of an auditor is trading while factually insolvent, which is the case for the Midrand school, that could be a possible RI, as the client would be trading recklessly, which is in contravention with section 22. So what you would see from this particular sentence that has been provided by the candidate is that they are identifying possible contraventions to the Companies Act, which might result in unlawful act. So with that particular, element, you can see that the candidate is identifying possible contravention. They're not concluding that it is, but they're identifying the possible sections that would actually, result in an unlawful act, which is good. Then on top of section 22, the candidate identifies section 128 again, which is financial distress. So there's a possibility there that there could be, contravening section 128, but the candidate is not concluding, they're identifying that possibility at this stage. That's the first paragraph. Then in the second paragraph, the candidate just goes and explains what the sections really relate to. It says, in our case of the Midrand school, the school is in a net liability position which could indicate reckless trading, but it's not automatic. And this is what the candidate is showing understanding of. They show that because the school is in a net liability position, that doesn't automatically mean that they are in contravention of Section 22. There's something more that would need to be done in the Midrand school's day-to-day operations that would show a possible reckless trading. And the candidate is getting there. Okay. So then they go again to say Section 128 would be triggered if it is deemed that the school is in financial distress. However, the fact that liabilities exceed assets does not automatically mean that a school is in financial distress. So again, good understanding of what the sections from Companies Act require. So Section 22 requires something more. Section 128 requires something more. Just because a school is in a net liability position doesn't automatically mean that they're breaching Section 22 and Section 128. So again, good understanding that the candidate is showing in terms of discussing an unlawful act. Then they go apply, which is very key, because what we saw in some of the responses was that a candidate would just automatically conclude that Section 22 and Section 128 is being breached because of the net liability position, which is not correct, technically speaking. Or some of the candidates would identify a possible contravention to Section 22 and Section 128, but they don't apply it to the scenario. They just leave it, at a point of just giving definitions. So they would just give definitions of what Section 22 is, Section 128 is, and leave it at that. So if there isn't any application to the scenario, to the information on the day, then one will not be seen as providing appropriate discussion for question 1. So it's important to have both the element of identifying the possible unlawful acts and then discussing those possible contraventions using the information that was presented on the day. So let's look at what this candidate used as application to the scenario. The candidate says, in our context, okay, in the position of the Midrand school, the existence of a subordination agreement of 10 million would be material, as it would result in a net liability in the liability owed by Achegos being subordinated and paid only when the Midrand school is solvent. Thus, we have a net liability position of 4.3. That's a fact. We are factually insolvent. However, if this claim is subordinated, the Midrand school will be able to pay other debtors in the ordinary course of business as and when they become due. This means that the liability will cease to exist until the Midrand school's assets exceed the liabilities. Therefore, in terms of Section 128 and 129, dealing with financial distress, which requires the auditor to look at the solvency of the client, in essence, the entity will be able to pay its debt. It means that the entity will be regarded as commercially solvent. So the candidate identifies that there is no breach to Section 128. Why? Because the entity, even though it's factually insolvent, even though its liabilities exceed its asset, the entity is commercially solvent because the Achegos loan will take a stand back, and it means that the entity will be able to pay its debtors as and when they fall due. Its creditors as and when they fall due. Okay, so that's what the candidate has used to apply the requirements of Section 128 to the scenario that has been given. Okay, then it says if the auditors are happy with the subordination agreement and it is legal and properly drafted, they will conclude that there is no financial distress. So there is no contravention of Section 128. It then further on goes to say, and there is no unlawful act that has been committed, and therefore a reportable irregularity will not be raised. So from here, you see that the candidate understands the requirements of Companies Act, understands what it would take to contravene those sections, and then they use the information on the day to support that there is no risk of an RI because there is a subordination agreement in place, which effectively just means that the entity is commercially solvent, i.e. the entity is able to pay its debts as and when they fall due. So that is the discussion that the candidate has provided for question 1, which is brilliant. Then under question 2, that is where the candidate would need to express their views in relation to the going concern of the entity, and also identify which evidence would need to be provided to the auditors in order for them to agree that the Midrand school is a going concern. So it then the candidate discusses that the auditors will assess the company's going concern and whether it's appropriate to prepare the Midrand school financial statements as a going concern. In this assessment, they will say that we are in a net liability position, which could cast doubt on the ability of the Midrand school to continue as a going concern if we can't pay our creditors as and when they fall due. However, because the Archegos group has subordinated the loan of 10 million until such a time that the Midrand school is in a net liability position, the auditors will assess the agreement, and if sufficient and in line with what is required to be included in the subordination agreement, they will conclude that it is appropriate for the Midrand school to continue as a going concern. So does the candidate demonstrate understanding of the impact of the subordination agreement on the going concern status of the entity? The answer to that is yes, and that is critical. Remember, for question 2, we said we are looking for a candidate that demonstrates understanding of the impact of the subordination agreement on the going concern of the entity, on question 2 of the entity, and also we're looking for the candidate to provide the additional evidence that would be needed. So they have shown that they understand the impact of the subordination agreement on the going concern assessment. Then if we look at the next sentence that the candidate has provided, in that particular sentence there, the candidate says the auditor, it says the subordination agreement will provide relief from repayment of the loan and boost cash flow projections supporting the going concern of the entity. So again, you can see that the candidate understands the impact of the subordination agreement on the cash flow and going concern status of the entity. Okay, you use the cash flow projections to support going concern. So in essence, they're actually identifying the impact of the subordination agreement and the kind of evidence that would need to be provided. So what is the evidence here? The candidate says we would need to provide the auditors with these cash flow assessment, cash flow projections, and the supporting documentations that are in place. So for question 2, the candidate has demonstrated understanding of the subordination agreement and the impact it has on the going concern status. They've actually also identified at least one additional evidence that would be needed for this particular question to persuade the auditors. Okay, so they've answered question 2. What they actually do is go over and above the minimum that is required. So the candidate says then here and provides insight in relation to the subordination agreement. They say in order for them to be satisfied, in order for the auditors to be satisfied with the subordination agreement, it will need to be legally binding and contain the correct terms. So they're saying, yes, we have the subordination agreement. It's our key evidence for going concern. However, for the auditors to be able to rely on that, the subordination agreement would need to be legally binding and contain the correct terms. So they're providing insight. But what becomes key with this insight that the candidate is providing is the fact that the candidate has gone into so much detail to explain exactly what they mean that the subordination agreement would be legally, or what the subordination agreement would need in order for it to be legally binding. So the candidate explains this very, very well, and that's what results in this being perceived as additional insight. It's perceived as going over and above the minimum requirements that are there. It's the discussion that goes along with what the candidate has identified. Okay, so that's key. So what is it that the candidate has provided in their discussion? They say, for us to persuade the auditors, what would need to happen is we need to ensure that the subordination agreement is done appropriately so that they can deem it as sufficient evidence. Okay, it's not, enough to just provide them with the subordination agreements. Let's check it and see, if it is appropriately constituted in order for it to be deemed as sufficient evidence for going concern. So then the question becomes, what is it, or how would we conclude that the subordination agreement is appropriately constituted, or if the subordination agreement is legally binding? The candidate provides an answer to that, which means, or which shows that they're providing us with good insight on the matter. The candidate says, that means we need to ensure that the subordination agreement is written and signed on behalf of the Articles Group by a person that has authority to do so. Okay, that's the first thing the auditors would need to check. The second thing is that the agreement would need to state that the entire 10 million will be subordinated until such time that the Midrand School's assets exceed liabilities. Again, very insightful and well discussed input. Then it then goes on to further say that the auditors will need to check whether the Articles Group complied with Section 45 of the Companies Act in granting this financial assistance. So the candidate also knows that in order for the subordination agreement to be valid, the person subordinating the loan needs to comply with Section 45 of the Companies Act, which is the fact that they're providing financial assistance. So that becomes very key, because if the Articles Group did not consider Section 45 Companies Act, then the subordination agreement is not valid. And that is what the auditor would actually need to go and check. So the candidate demonstrates good understanding of what we need to do to persuade auditors to agree with us on the going concern assessment of the Midrand School. Very brilliant discussion that has been provided. Okay. It says the auditor will also check whether Articles Group has the ability to honor the agreement and they are in a good financial position themselves. So that becomes really key in the assessment of Section 45. So here, what the candidate has done is provide discussion of what would constitute good evidence to persuade the auditors over and above what was the minimum requirements. They've went on to give additional discussion and insight on this particular matter, which is really good. And it's the discussion that becomes key, because what we saw is some of the candidates would just give a laundry list of the things that an auditor would need to check without discussing the implications of the line items that they've provided. That is not sufficient for, it's not sufficient for insight, providing valuable insight. One would need to go and discuss some of the elements that are there in order for us to conclude that no, you as a candidate or the response that you've given has provided us with valuable insight. Okay. Then the last requirement is in relation to disclosure. So what did the candidate identify as something that would need to be disclosed in the financial statements in relation to going concern? They talk about the fact that we would need to actually disclose the fact that the loan would still need to be part of the financial statements. This is good because if you go back to the scenario, Ryan had stated that the subordination agreement means that the liability will be removed from the financial statements. That's not true. The liability will still form part of the financial statements. So the candidate has identified that that would still need to be presented in terms of IFRS. Then the candidate also says the 10 million loan, which has been subordinated, would need to be in the agreement would need to be disclosed in the financial statements as an important aspect of the preparation of the Fs. So one would need to go out and give details regarding the subordination agreement. Then thirdly, they identify that in the going concern note, the net liability position would need to be disclosed together with any other conditions that might indicate existence of uncertainty that will cast doubt on the company's ability to continue as a going concern. So the candidate really shows understanding of what would need to be disclosed in the financial statement. So if we go back and assess everything that has been given here, the candidate responds appropriately to question 1, unlawful act reportable irregularity. They also give good discussion on whether or not the school is a going concern, and the evidence that would need to be given to the auditors. Then they give insight, high-level indicator insights onto what else would need to be considered for the subordination agreement to be valid, to be legally binding. And they give good discussion. They just don't list a few aspects. They go and discuss those aspects in detail, which provides good insight. And then they also respond appropriately to question 3, disclosure requirements. So overall, this particular candidate would be rated highly competent. Then if we look at the second script, that is script Q. Script Q, the candidate starts off with salutations, okay? Then they respond to the 3 questions. So if we just go directly to the 3 questions, let's just see what has been provided here. So question 1, we're looking for really good discussions in relation to an unlawful act and that resulting in a possible RI. So it says, in order for a matter to constitute an RI, there needs to be an unlawful act which causes financial loss to the entity and its creditors, okay? Although there are some concerns surrounding the liquidity and solvency of the Midrand School, which brings into question Companies Act Section 4, we have put in necessary procedures to mitigate the risks. Okay, so what are those procedures? The candidate is trying to apply it to the scenario. So then it says, firstly, there is no unlawful act or omission committed since we are aware of the solvency and liquidity issues. And this is why we obtained a subordination from the articles to cover any concerns in relation to losses that might be caused to our creditors if we are no longer able to pay them. So this is good. The candidate has identified that, there is no unlawful act because what we've done is actually acted in the best interest of creditors, which will not result in a loss being suffered by these creditors. So the candidate has actually gone and applied the definition of an unlawful act and has actually used information from the scenario, i.e. the subordination agreement, to actually justify why there is no unlawful act. Okay. There is another factor that we need to consider here, which ties in with considerations of being in contravention with the Companies Act, which will result in an unlawful act. We need to look at the difference between financial insolvents definition per Section 128 and also commercially insolvent. So the candidate is saying there's a possible non-compliance to Section 128, but let's look at the definition before we conclude on an unlawful act. So when they apply, they'll say financially insolvent being what we are, the fact that the entity is in a net liability position, we are aware of the fact that we are, technically insolvent, okay? But when it comes, also factually insolvent, but when it comes to the subordinated loans, we are not commercially insolvent because we are able to pay our debts. That's what the candidate is saying here. Yes, we are factually insolvent, our liabilities exceed our assets, but when it comes to commercial insolvency, we are not commercially insolvent because of the subordination agreement allowing us to pay our debts as and when they fall due, which is very, very important. So the candidate has applied the subordination agreement to justify why we are not in contravention of Section 128 of the Companies Act. So based on that, one, there is no financial loss. Again, there is no unlawful act. Therefore, there is no RI that will be reported. So the candidate provides good, discussion in terms of unlawful act. They identify the relevant sections that would need to be checked. They apply those sections as well. It's not good to only give definitions. You need to apply those definitions as well. If you look at what the candidate had given in this third last paragraph, that is just definitions. What makes this candidate competent is the fact that they went on in the second last paragraph to go and apply the facts from the scenario to the definitions in order for them to conclude. That application becomes key, and that's what results in the candidate being competent or providing good discussions for question number 1. Okay. Then if we look at question number 2, the candidate talks about the auditors will initially be concerned by our solvency and liquidity position since we're currently in a net debt position. So again, the net debt position, will be concerning for going concern purposes. However, the candidate goes on to show that they understand the impact of the subordination agreement on the going concern status. So they say that yes, there is a subordination agreement. However, the subordination agreement might not be enough to cover all the migrants' ability to continue as a going concern, as the subordination agreement suggests that Archegos will stand back from receiving its repayments on the loan alone. That might not be enough, because over and above standing back on the 10 million loan, maybe the Archegos group needs to support the Midrand school in another way. And the candidate then says we would need the Archegos group to issue a letter of support to validate that the Midrand school is a going concern. So what this candidate is saying is, over and above the subordination agreement, over and above the key evidence that we have in the scenario, perhaps there's something else that the Archegos group would need to do in order to provide, in order to persuade the auditors in relation to going concern. And what are they identifying as that additional thing that the group would need to do? It is the group providing a letter of support. And what makes this letter of support sufficient to be counted as additional evidence over and above the subordination agreement is the fact that the candidate explains it very well. What we saw in some of the responses is candidates would mix up this letter of support issue. One would say, no, the subordination agreement is not the appropriate evidence. We should have given a letter of support to begin with, which is not true. You can't start with a letter of support. You need to start with the loan that is currently there, with the 10 million loan. And that is why the subordination agreement is still important. So you can't invalidate the subordination agreement and then say, no, only a letter of support is necessary. That is not true for the facts that are given in the information on the day. So what this candidate is doing, which is different, is they are saying over and above the subordination agreement, the entity will also need a letter of support. And the candidate goes on to further explain why a letter of support is necessary in addition to the subordination agreement. It says here, the candidate says here, the letter of support indicates that Archegos will stand in to provide any future cash flows that might be needed. And this being the main concern when it comes to solvency and liquidity. The letter of support, if used in instances where there's a business risk surrounding the entity as a result of a net liability position, we would need the letter of support to justify our conclusion of the going concern status, as we would need Archegos to provide us with such a letter until we are no longer considered a business risk. So providing the auditors with both the subordination agreement, which is what we need for the current loan that we have, as well as the letter of support for future cash flows is crucial in order for the auditors to have the necessary comfort that the Midrand school is a going concern. So here the candidate shows that they understand what additional evidence would need to provide it, and they explain it well. And they also show an understanding of the subordination agreement and the impact on the going concern assessment. So they respond very well to question 2. Then when we look at question 3, that is where they talk about disclosures. They would say that we would need to disclose in our notes to the financial statements, particularly the going concern note, that the entity is deemed as a going concern. Okay, so they're identifying that there's a specific going concern note that is needed. We would need to include our basis of how this was determined. With that particular sentence, do we consider it as valid disclosure? Remember, the CFO, Ryan, asked you for what are the minimum disclosures. Ryan had already stated that we need to include the basis of identifying going concern in the Fs. So that's not something new. We are looking for all these other new aspects that would need to be disclosed as a minimum. Okay. So what would constitute a valid, disclosure element from this particular response, what is the assumptions that were made in arriving at the conclusion. So those assumptions become key, and the candidate further elaborates here to say where there's significant judgment, where there are assumptions that we made in determining the going concern, we need to disclose those assumptions. And that is what constitutes valid disclosure for the purpose of the Fs that are there. Then the candidate also goes on to say we need to also disclose the details of the subordination agreement of the 10 million loan that is there. So good disclosure for question 3, good discussion on the additional evidence that would be needed to persuade the auditors, and also the candidate shows understanding of the impact of the subordination agreement on the going concern assessment. They show that understanding very well. Then under the first question, the candidate also shows good understanding of what would put the Midrand school at a risk of an RI, and they have applied that. So application is key under question 1 in order for that to be assessed as good disclosure. Okay. So that is question script Q. So this candidate would be actually rated competence for this particular task. Then let's look at the last script, which is script E. In this script, again, we're going to assess the discussion that the candidate has provided under all 3 questions. If we look at question 1, the candidate starts off by saying the net liability position does put us at a risk of an RI. So that is not true, because being in a net liability position does not automatically result in an RI. It's not in itself alone contravention to any of the unlawful acts that could arise. So that is not technically correct. The candidate then further goes on to say, the subordination agreement on the loan shall not be sufficient, as it shall still be present on the balance sheet. Yes, the loan will be present on the balance sheet, but what does the subordination agreement actually show? It shows that the Midrand school is not trading recklessly. The Midrand school is actually acting in the best interest of its creditors. That's what the subordination agreement shows in terms of question 1. The subordination agreement also shows that for Section 128 financial distress, the entity is commercially solvent because the loan is being subordinated. It means that the Midrand school will be able to pay all its other creditors, and because there is no expected repayment from the subordination agreement for a certain period of time. So the subordination agreement will still be on the balance sheet, we agree. But for the purpose of question 1, the subordination agreement shows that there is no unlawful act because the entity is not trading recklessly as a result of having obtained the subordination agreement, and the entity is also not in financial distress. Okay, so the candidate has not used the subordination agreement in the right context for the purpose of question 1. The school may seem to be trading recklessly. However, due to the pandemic, again, the pandemic is not something that can be applied to the key information that was presented on the day of the assessment. On the day of the assessment, it's all about the subordination agreement. So one needed to use the subordination agreement in order to justify any unlawful act that could come up. It will be our responsibility to provide an assessment of an entity's ability to assess going concern. Okay, we're still on an RI, we're still on a reportable irregularity. However, the candidate brings in going concern. That is okay. Going concern is part of the questions that were asked on the day. Therefore, we will consider this as valid. What is the candidate telling us in the fourth paragraph? They're telling us that we need to provide the auditors with a forecast to support our going concern, and that's valid. That would be counted as additional evidence to persuade the auditors of going concern. Then it says, once the auditors are satisfied with the above, the reportable irregularity will be revoked. So again, if we look at those 4 paragraphs that have been given, it's actually 4 sentences because they're very short. If we look at those 4 sentences, there is no demonstration of good understanding of an unlawful act and what would put the entity at a risk of an RI. So unfortunately for question 1, the candidate did not respond appropriately. For question 2, This is where we need the candidate to discuss whether or not they think the Midrand school is a going concern and what evidence would be provided to the auditors. The candidate responds to the evidence that would need to be provided to the auditors. It says here, a subordination agreement is a legal document that establishes that ranking. So there is just theory, no application. They're just giving us the theoretical meaning of a subordination agreement. It says the auditors will need to assess the subordination agreement by considering the following. Again, there's no discussion there. It's just a list of the things that one would need to look at when they're assessing a subordination agreement. So the discussion is lacking, and that is why none of those elements would be considered as valuable insight for the purpose of this task. We need the discussion. The discussion is critical in order to demonstrate understanding or provide that valuable insight when it comes to a subordination agreement. Okay. Again, the subordination agreement is used in isolation. Like, reading what the candidate has given here for the subordination agreement doesn't provide an indication that the candidate knows how the subordination agreement actually impacts the going concern of the entity. It is just a laundry list. It's the definition of what a subordination agreement is. It's a list of what would constitute a valid and legally binding subordination agreement. It doesn't give understanding of how the subordination agreement will actually impact the going concern of the Midrand school. So again, that aspect of question 2 is not responded to very well. Then, if we look at what evidence would be needed to be given to the auditors, the candidate really gets that consideration correctly, because you can see here, they tell us everything that the auditors would need to actually do in order to conclude on the going concern status of the entity. And what becomes very key there is the fact that there must be a 12-month forecast or an assessment that has been done by management that would support the going concern, and then that the plans that management has would need to be feasible and also checked by the auditors. So there is good demonstration of what evidence would need to be provided. Then if you look at the disclosure must be provided in the notes to the financial statements of management plans, and whether substantial doubt is or is not elevated by the plans. Again, we're not sure where this is going to be in the notes. Disclosure must be provided in the notes. There's so many notes in the financial statements. Which one exactly would need to provide this particular item that the candidate is identifying? That is not clear. These disclosures must be included until such events or conditions that give rise to the uncertainty have been resolved. Okay, again, what type of information are you looking for in the financial statements? Where is it going to be? That disclosure is really not clear for this particular response. Then it says the full disclosure of the subordination agreement should be noted in the financial statements. Okay, that's fair, that's okay. You can see where the candidate is coming from, but that's the only, valid disclosure that they've given. I mean, over and above everything that they could have spoken about or given as consideration for disclosures, and the specific aspects of the disclosure is not, apparent in this particular discussion. So response to question 3 is also not, very, very good. It's just, okay, it's not here or there. So if you look at overall what the candidate has given, they've given what we need to persuade the auditors. Okay, they've listed what we need to persuade the auditors, and they have the disclosure relating to the subordination agreement, but that's the only thing. Did they demonstrate understanding of the impact of the subordination agreement on the going concern assessment? The answer is no. Did they actually, assess properly what would put the Midrand school at a risk of an RI? The answer is no. Those are two critical elements that would that were needed to show understanding, to show application on the day, to show proper thinking on the day of the assessment. And those two aspects are not valid. Hence, for this particular, script, the candidate would be rated limited competence. Unfortunately, it's those, it's how you use the information on the day that has been given to actually, justify or appropriately respond to the task that has been given to you that becomes very important. Question 1 was all about a candidate applying the information that has been given on the day, applying the information to the scenario. The candidate candidate lacked in that. Question number 2 again was about showing how the subordination agreement will impact the going concern of the assessment. The candidate didn't demonstrate understanding of that. So for those particular 2 aspects that are not responded to very well, unfortunately the candidate would be rated limited competence in this regard. If you look at the evidence to persuade the auditors, it's there. However, it's like a list that is just being dumped, of the things that we know would need to be looked at for going concern, which is okay. There's nothing wrong with that. We've counted it as valid evidence. Okay, some of the aspects are valid evidence. So the 12-month forecast becomes key, and the plans being feasible also. Then the last thing that is there is the fact that the disclosure is not good. They've just said something lightly about the subordination agreement, but there's nothing else in this that could actually result in key minimum disclosures being apparent for the Midrand school. So unfortunately, that would be a limited competence. Okay, again, this is a learning point. It's all about you identifying what went wrong and how you can fix it going forward. And remember, in terms of assessing what went wrong, it's not only in your response. Maybe sometimes you need to go back to your understanding of the trigger. Did you see the trigger? Did you prepare for it well? Did you understand the trigger, in the pre-release period? You need to go through all of those and identify where things went wrong so you can fix that going forward and make sure that your responses demonstrate competence for the particular task that you are dealing with. So I hope this is helpful and that you guys can go and actually learn from this particular task so you can do well going forward. Okay, thanks guys. That's it for task A.